Hong Kong has been the leader in the number of hedge fund startups this year so far, and in terms of the amount raised. Of the 2.1 billion raised for new startup hedge funds in Asia, Hong Kong accounted for a bulk of it, around 1.4 billion. So Hong Kong has grabbed most of the market share. I think a lot of the reasons why Hong Kong is successful have been in place for a long time. That would include a fair and transparent regulatory regime, low tax rates, a common law legal system, free flow of information, human and financial capital. But two other things really stand out this year. One is China and the increasing internationalization of the renminbi. The other also is our regulators did a very good job during the crisis. Hong Kong was one of the few markets which did not ban short selling in October 2008, which in retrospect other regulators who did so admit that that maybe wasn't such a good idea. So a stable regulatory regime is also, I think, one of the reasons why both local and international capital has been attracted to hedge funds in Hong Kong.
Yeah, Christophe, that's a really good point. In terms of where the money is flowing to, if we're watching where the dollars are going to, are there any particular strategies that you see the different managers in Asia, which ones are benefiting from a change of perhaps investors' heart? Because a few years ago, I remember it was all the bottom-up managers that were getting all the money. Has that changed this past year?
There has been money inflow into the equity markets, as you pointed out earlier, into equity managers, because the markets have been buoyant, at least in the first quarter of the year. A recent Credit Suisse report pointed out that amongst Asian investors, the top 3 strategies that they are interested in investing in are global macro, trading-oriented long-short equity hedge fund managers, as well as event-driven strategies. And I think the common theme here is that global macro conditions remain very unstable and very unpredictable. So generally speaking, investors are looking for strategies that are more nimble and can take advantage of movements in the market related to macro themes.
Yeah, Christophe, I want to squeeze a couple more questions in there. We're a little bit short on time, but one of the areas I want to focus on is returns. There's been an article out from Bloomberg regarding some of the hedge fund returns and comparing that to long-only mutual funds and in some cases ETFs. And it's really quite critical of the returns and the pricing system of hedge funds in terms of the 2 and 20, the 2% fee and a 20% take on the profits. Has there been any discussion among your members as to if that will change in the near term in terms of fees and performance?
I think ultimately investors focus on after-fee returns, and I think the numbers for Asian hedge funds or hedge funds in general are very compelling.